The simple genius of Morocco's economic rise might sound like just another success story, but what makes it truly unique is how a country that was once heavily dependent on agriculture and raw exports managed to quietly transform itself into one of the fastest-growing industrial hubs in Africa without massive natural resources or global dominance. And this transformation did not happen overnight, but through a series of strategic decisions that focused on positioning rather than power, because instead of trying to compete directly with global giants, Morocco chose a different path, one that leveraged its geographic location, political stability, and targeted investments to create a competitive advantage that is now attracting global companies and reshaping its economy. And to understand this shift, we need to go back to a time when Morocco's economy was largely dependent on farming phosphates and low-value exports, which made it vulnerable to external shocks such as weather changes, global price fluctuations, and limited industrial growth. And this created a situation where economic progress was slow and opportunities were limited, especially for a growing young population, and this is where the government began to rethink its strategy, not by trying to dominate global markets, but by integrating into them more effectively. And one of the most important advantages Morocco had was its location sitting just across the Mediterranean from Europe, which meant it could position itself as a bridge between Africa and Europe, allowing companies to manufacture goods closer to European markets, while benefiting from lower labor costs and favorable trade agreements. And this idea became the foundation of Morocco's economic strategy as the country invested heavily in infrastructure, including ports, highways, and industrial zones, to attract foreign direct investment and create an environment where global companies could operate efficiently. And one of the most significant projects was the development of the Tangier Medport, which became one of the largest and most advanced ports in Africa, connecting Morocco to major global shipping routes and enabling faster and more efficient trade. And this infrastructure investment was not just about transportation, but about creating an entire ecosystem that supports manufacturing, logistics, and exports. And at the same time, Morocco focused on specific industries where it could build competitive strengths, such as automotive, manufacturing, aerospace, and renewable energy, rather than spreading resources too thin across multiple sectors. And this targeted approach allowed the country to develop expertise, attract specialized investment, and integrate into global supply chains. And this is particularly visible in the automotive sector, where major global companies have established production facilities in Morocco, turning it into the leading car exporters in Africa. And this success is driven not just by low costs, but by a combination of skilled labor, strategic location, and supportive policies that make it attractive for businesses looking to optimize their operations. And another key factor in Morocco's rise is political stability, which is often overlooked but plays a critical role in attracting investment, because companies prefer to operate in environments where policies are predictable, risks are manageable, and long-term planning is possible. And Morocco has managed to maintain relative stability compared to many other regions, which has increased investor confidence and encouraged long-term commitments. And at the same time, the government has implemented reforms to improve the business environment, reduce bureaucratic barriers, and create incentives for foreign investment, which further enhances its attractiveness as a manufacturing and export hub. And this combination of location, infrastructure, targeted industries, and stability has created a powerful growth model that is enabling Morocco to move up the value chain and diversify its economy beyond traditional sectors. And this raises an important question. Is Morocco's success a result of unique circumstances, or is it a model that other countries can replicate? And this is where the real story begins. But what makes Morocco's economic rise even more interesting is not just how it grew, but whether this growth can actually be sustained in the long run, because while the strategy of becoming a manufacturing and export hub has delivered impressive results, it also comes with risks and limitations that could define the country's future, because being positioned as a low-cost production base for larger economies, especially Europe, means that Morocco's success is closely tied to external demand and global economic conditions. And if those conditions change, for example, due to economic slowdowns, trade disruptions, or shifts in supply chains, the country could face significant challenges in maintaining its growth momentum. And this is one of the biggest risks of export-driven models, where dependence on external markets can create vulnerability. And this is why the next phase of Morocco's strategy is so critical, because it needs to move beyond just being a low-cost manufacturing destination and start climbing the value chain by developing higher-skilled industries, innovation capabilities, and domestic economic strength. And this means investing in education, workforce development, and technology to ensure that workers are not just performing basic manufacturing tasks, but are also capable of contributing to more advanced production processes, design, and innovation. And this transition is not easy because it requires time, resources, and structural changes in how the economy operates. And at the same time, Morocco must also address internal challenges such as income inequality, regional disparities, and unemployment, particularly among young people. Because while industrial growth has created jobs, many of these jobs are concentrated in specific regions, leaving other areas less developed, which can create social and economic imbalances, and addressing these issues will be essential for maintaining long-term stability and inclusive growth. And another important factor is competition, because Morocco is not the only country trying to position itself as a manufacturing hub. Other nations in Africa, Eastern Europe, and Asia are also competing for the same investment and opportunities, which means Morocco must continuously improve its infrastructure policies and business environment to remain competitive. And this includes maintaining efficient logistics systems, reliable energy supply, and favorable regulatory conditions that attract and retain businesses, and at the same time, global trends, such as automation, digitalization, and sustainability, are reshaping the nature of manufacturing and trade, which means Morocco must adapt to these changes to stay relevant, because as automation increases, the advantage of low-cost labor may become less significant, and countries will need to compete more on productivity, innovation, and efficiency. And this is why Morocco has also invested in renewable energy, particularly solar power, which not only supports sustainability goals, but also reduces energy costs and enhances competitiveness for industries. And this forward-looking approach could become a key advantage in a world that is increasingly focused on clean energy and environmental responsibility. And as these factors come together, the future of Morocco's economy will depend on its ability to balance external integration with internal development, ensuring that growth is not only driven by exports, but also supported by a strong domestic economy that can generate demand, innovation, and resilience. And this is where the true test of its economic model lies, because short-term success is one thing, but long-term sustainability requires continuous adaptation, strategic planning, and the ability to respond to changing global conditions. And this brings us back to the original idea of the simple genius behind Morocco's rise, which is not just about location or low costs, but about making smart strategic decisions that leverage existing strengths while preparing for future challenges. And this is what sets successful economies apart from those that struggle, not just the ability to grow, but the ability to evolve. And as Morocco continues on this path, it serves as an important example of how countries can transform their economies through targeted strategies, infrastructure investment, and global integration, but also a reminder that economic success is never permanent and must be constantly maintained and improved. And in the end, the real question is not whether Morocco has succeeded, but whether it can continue to adapt and grow in an increasingly competitive and rapidly changing world. And that is where the real story continues.